Hello, my name is Tim Kraus with Kraus Accounting Group. Over the past 3 years, I have purchased 4 different accounting firms and also grown my accounting firm organically by about 2.5 times. And today we're going to go over how to make your firm more valuable if you're looking at selling your accounting firm. So this is going to be one of the simplest ways. It's not going to be the easiest, but it's going to be simple. And this is a huge piece of it, is getting what's in your head out. How to get the knowledge out of your head. And that is really important. And we have bought some firms where none of the knowledge is out of the seller's head, and we've bought some where there's some knowledge out of their head. And definitely we consider those firms that we are buying more valuable if the knowledge is out of the seller's head. Because me as a buyer, I buy accounting firms. I can't buy what already exists in your brain. Like, if it's there, we got to get it out some way, because you want to go. You want to retire, you want to slow down, you want to do something else, which is amazing, which is great. But I can't buy that if you're going to leave. And most small accounting firms have 0 written processes, which I know this is important, not urgent, which is why it often doesn't get done. But if you're thinking of selling at some point, please start doing this. And then, so we have to spend a lot of time extracting the process. We have one firm that we bought up in Seattle, and we are almost done with the year-long transition that we've been doing. There's still tons of stuff we need to gather. We have done multiple video sessions with the owner to try to pull out for each client what we actually doing. What do they expect from us? Because there's also no engagements, there's a whole bunch of stuff that's missing, that's based on just ease at the time, but then makes it hard when it's time to actually transition. If you can document your processes, and actually they're the ones you follow, very important, it will go for an easier transition that the buyer, me, is going to be looking at, and therefore higher confidence that we're going to be able to fulfill what the requirements are and the expectations are of the clients, of the relationships. Because again, we are buying hundreds or dozens of relationships. That is what we are buying. That is what your accounting firm is 9 times out of 10. And if I have higher confidence that we're going to be able to fulfill, that we know what we're doing, that we're going to be able to easily hit the expectations of the clients, it usually means a better valuation and better terms. And again, valuation is the price itself. The terms is anything of value to the other party that is not actual dollars and cents. I have a video on price and terms on this channel here. So the start of this is going to be with delegation. So delegation, handing off a task to someone else with the instructions and also with some of the vision of how it should be done, and then reviewing that task when it is done to make sure that it was done properly. This is how we delegate. This is how we teach. We'll go over that a little more later in the slides here. But delegation makes it so that when you're hiring people, they know what they need to do. It reduces the owner's dependency, which is huge, because if you want to sell, this is the most scary part. Most firms I'm looking at, key man risk of the owner is the largest concern, bar none. Like, that's huge. So also makes it so that when a new buyer comes in, we're able to reduce mistakes and stress because there's a clear process of how stuff was done. Because everyone does things a little bit differently. Case in point, we just took over a client from someone else, and the way that they handle their reimbursements historically through payroll is different than the way that we handle reimbursements. Now, we believe the way they handle reimbursements has too much risk, and the way we handle reimbursements has less risk by having the actual business or managers approve the reimbursements. But it's still a different process, one way or another. So it's still important to know that, so that then we can reduce the risk of mistakes and stress, especially on the clients, because during a transition, that transition phase, those 30 and 60 and 90 days are very important points, especially on a monthly recurring service purchase, of what are we following and what are we doing compared to what the prior provider was doing. So, and then also, if you're not going to sell, by the way, you should do this just period, because it makes it so the firm can run without you or run with a lot less of you. Because a lot of your owner dependency, a lot of your thoughts are out of your head, and your team knows how to act like you would act. So a simple process here, this is not my invention here, but a simple process actually Alex Hormozi talks about, is going to be demonstrate, document, duplicate. Very important here. So the demonstrate, this is from you, the owner. The document I've seen this two different ways. Alex Ramosi has it be done by the owner. From the book, I'm a systems guy, I like systems. From the book, Systemology, they have it be done by someone else, but someone has to document this. Okay? And then the duplicate is going to be the review of the actual process at the end there, and are we getting the outcome that we want? We started this little factory. We have a square that goes into this factory, into this black box. Let me fill it in as a black box here. So that goes into this black box, and it comes out as a circle. That's what this process. This right here. This is your process. So you then go through this yourself. You demonstrate that, hey, it goes in this way, and then we shave off these edges, and it comes out as a circle. Then you step back, and then you have your employee go through the exact same process without any help outside from you. You can pretend like you're not there. But you're going to be given, at the beginning point, which we're going to go more later too, but the vision, and this is going to be the review. If they start with the square, and they come out, let's have it read here, they start with a square, and they come out with a triangle, okay? We have a problem, likely in the process. 9 times out of 10, it's in the process. And going and fixing the process, do not just correct them to, hey, it should be a circle. You could say that, but don't just make it there, because then now you've had it. Now you've put yourself in the process. You put yourself in this scenario here. If I could draw at all legible, you've put yourself back in the process here as the owner. So now you're still in the process. Not what you want. You want to ask what happened, document and change your process there, and then have them send another square back through the process and see if it comes out with the right one. Okay, we have a lot of tools these days that can make documentation easier, a ton. There's Scribe, haven't used it before, seen it around a lot. There's videos, we use Loom nearly every single day to help transition things. Also, we use them because we have what we call a communication escalator, is that as we're communicating, if there's a missing communication, how do we escalate that communication to help it so that the next person can understand, and so we can have less misses in communication. Very important. I'm not talking about that here, but that's something we have within our company here. Written SOPs supporting, also very important, especially because if a video is 5 or 10 or 15 minutes long, a written SOP, or take that video, transcribe it in chat, and then take the written SOPs out of there, will help in case someone just doesn't know part 7 out of 10. They don't got to watch a 15-minute video. They can go to part 7. How do I do this one part again? And then be able to know. Flowcharts, like them a lot. From the book Scalable by by Ryan Dice. He goes into flowcharts, and he goes into kind of the process of how you make the flowcharts, and he has basically he does very, very simple flowcharting, where you have a square is a process, and a diamond is a decision or choice. Okay? That's very simple flowcharting. And then project management systems, one of the first things I did when I got in accounting was I implemented a project management system. To be fair, I was really stupid, and I implemented it right before tax season. Don't do that. But I didn't know what I was doing. We're very big on that. We're currently using the one called Canopy. We have used Carbon in the past. Carbon's very good as well. But this is very helpful to have a place for everything. A spreadsheet is ill-advised for this. There's just not as much you can do with a spreadsheet as you can do with a full-on project management system that integrates potentially billing, emails, notes, task flows, all those sort of things. We still use spreadsheets, and spreadsheets still feed into it. But highly recommended. So, don't document absolutely everything. I'm going to go over kind of some pieces with that. But we're going to document the low-risk tasks first, high repeatable tasks first, big time sucks. So don't document the stuff that barely ever happens. Have simply a system that if the process does not get this, or if it's some weird exception, they bring it up to you. It has to be as simple as that. So here is kind of a matrix that I think about when I think about documenting processes. essentially we have our repetition from low to high, and we have our risk from low to high, and that could be reputational risk, that could be literally dollars and cents risk, accounts payable, accounts receivable sort of things. I typically start over here. That's not how you spell start. Start over here. I then head this direction. And then once I go here, then I go back. And then I go, actually no, that's not true. I go from here over to here, and then I go on slowly working my way back up through these. That's essentially the process in which I do I start with the with the lowest risk, high repetitive stuff that's really annoying. Data entries oftentimes on that list. And then once those are done, I go to a little higher risk, but then I basically shoot way over to high repetition again on the slightly next higher level risk stage. Maybe now this could be viewed by the client, or this is interacting with the client. And then I step it up from there. Now maybe at this point here, we are starting to move money. That is a very risky stage. And then I'm going to go to what is the lowest risk, highest amount of repetition I could do with this. So that is in general how I look at what am I actually going to document. And yes, those simple things, oh, it's so easy, I'll just do it myself. It would take longer for me to show someone else. Absolutely, it will. It 100% will. One time or two times, but forever it won't. You have to make a decision when you're going to the processes here. Something I say to my team is slower now. Boom. Faster forever. Okay. This is the trade we're making. The reason why this isn't done is because it is slower now. But then you're going to be always doing it. There's something called the implementation, an implementation curve, implementation mountain, whatever you want to call it here. But it goes for a process. Okay. Another line chart. I'm having a line chart inside of a line chart. We're having an inception day right here. And this accesses the time, okay? The time it takes to do a task. And this is basically, this is a different version of time. This is time it takes. Oh, come on. And this is time as in like number, the lower one is time as in like number of days, right? And a process, your own here, you will have an upward bump when you are documenting the process. But the goal is for it eventually to go down. And this delta between this here and this here, that is your benefit, that is your increase. So the question is, and this is why I start with high repetitive things first. The question is this delta over a certain length of time, is this volume area here, is that time savings worth the volume area here? Now, to be fair, again, right here, that will take more time. This bump up always takes more time. Slower now, faster forever. Start investing in those, again, during tax season, during different times you can, but there are a lot of times when you can. This is how I think about if I'm going to be doing a process, which is why, again, I start with the low risk, high repetition. Because I want to get out, because low risk in general, for the most part, means easier to document. And then high repetition means that I'm going to have the biggest bang for my buck as far as in the time savings over time. So, all right, that's my 2 cents on that one. So here are some potentially beginner processes you could do that will be helpful. Making a clear system of how you name and store files. Very repetitive, not very high risk, all internal, but it will make you look stupid if you can't find a file in a timely manner, or if you ask a client for multiple times per file, it will do that. Month-end checklist, again, somewhat internal, somewhat external. Sales tax filings. This one is more important, but it's not usually the most technical or the hardest ones to do. How we onboard a client, we're getting more risky now, because now we're actually a lot more client-facing, client-involved. And then how we request missing information, how we schedule or prepare for meetings. Also, that is important because more risk, because now you are client-facing. So, Video SOPs, I like these a lot. As you can tell, I'm making a video right now. But video SOPs are great. I give them the gold star right here. So they are the fastest to create from scratch. They are easier for a new person to follow for several reasons. Like we do, our team records videos a ton. We use Teams. We use Teams and Loom for our video stuff. Our team records certain things that we teach them, and they will refer to them many, many times. So this also shows them exactly, because we work on computers a lot. This shows them exactly what they are, what we're clicking on, and what it looks like, and what the site looks like, and different things like that. Which is really important, because just doing that over the phone, like, as we know, all software changes. Especially QuickBooks Online. QuickBooks Online moves around its stuff all the time, and things change. So you trying to recall from a phone call, and the phone call is not recorded, most likely, and all this other stuff, it just is really crappy compared to being able to do a video. So, and then if you have assistants or any offshore team members, this also helps them a lot too, because then they can go back, they can slow it down. Also with Teams, when there's transcription, or actually Teams and Loom, they have transcription to make it easier to understand, because sometimes we do not speak with the most diction or with the most clarity. Probably had issues with that in this video. I used to stutter when I was a kid and talk way too fast. So, the duplication test. How do we test to make sure we're on the right track? Have someone watch the SOP without you there. Because if you're standing over their corner and saying, do they have any questions, they're not truly following the SOP. Simple, they do the task. If it's wrong, the SOP was not good enough. As long as you're certain that they are putting in the required amount of effort, if it was wrong, the SOP wasn't good enough. Fix the SOP. Not the person. Do not go to the person directly and be like, nope, this time you need to do this, because now you've put yourself back in that loop. This is making your firm more valuable by getting you out of the loop. This might even make your firm so valuable and might pull you out of the loop so much that you might not even want to sell. That could be a possibility. If that happens, and eventually want to sell later, reach out, because I'm interested. So, this is from Dan Martell. I don't know if he got it from somewhere else. Probably did. There's not very many new ideas out there. The 10-80-10 delegation framework. So this is something to think about. You have your 10%, which is your vision and your instructions. 80% is them doing the work, is them doing in the factory, doing the thing. And the last 10% is you approving the work. This was from my analogy from before. If we look at this here, this would be given the vision of the square to the circle, right? Then in the 80% here, this is the actual factory where things are done, where they do that. And then on the review stage, you see, did they make a circle? Did they make a triangle? Did it come out just as a square again? What happened? And then if there are problems, you go back and you fix the factory, which is now this box with the yellow line through it. Because construction zones, reflective material. Anyways, but this is kind of how you should be doing it. And this is where you're going to have a lot of your benefits in time, is that you're the 80% you should not be doing the work. So imagine currently the business you're in, the business you're running, the accounting firm you're running, if eventually, if documented well enough, if 80% of your time you could have back. That means going from 5 days a week to 1 day a week. But that 1 day a week is going to be vision instructions and review to make sure things are going well. Okay? Just throwing it out there. So, documenting increases the value of your firm in 3 ways. And the biggest one, obviously, owner dependency, which is super concerning when someone's looking to buy in a firm. Because in all the firms I bought, the owner is not there anymore because they didn't want to be there. Thus, they wanted to sell. So I had to figure out how to make it work without them. It makes the transition far easier and improves the retention because the clients know what to expect. And the new buyer knows what to expect as well. Again, kind of morbid. There are only 3 exits to an accounting firm. You either sell, you close, or you die at your desk. Roughly less than 10% will sell. I'll let you figure out the other 2 percentages. Roughly less than 10% will sell. So, my suggestion, my kind of hope for you in this, is that you do 1 process per week. Again, slower now, faster, forever. It will take time. No ifs, ands, or buts about it. Pick a low risk, high repeatable task. Record the video. Okay, and then transcribe it is also a good thing to then have go along with it. Sorting and project management system if you don't have one stored in Excel. I know you have Excel. Okay. Assign someone to it, or the future you, but again, future you is if you're really, really small. If you have employees, assign someone to it. And then improve it after the first handoff. Look at that 10-80-10, and really that review stage is so important. That review stage, you're not testing the employee. Let's get that straight. You're testing your process is what you're testing at this review stage. Now again, if there's repeated and other people can do it and they can't do it, then sure, you have potential employee issues. Cool. But for the most part, you are testing your process. Start making assets, start making nouns, stop doing verbs in your business. Okay? So, if you do want to sell someday, start delegating today. It will make your business more valuable. Get the knowledge out of your head. Build a repeatable operating system. Make the firm less dependent on you. And then make a higher value and also an easier life. Again, you might choose you don't even want to sell once you start delegating things. Because maybe some of the most annoying things you do in your business are some of these repetitive things that you could then delegate off. Make the time investment. It'll be worth it. If you choose to sell or not to sell, it'll be worth it regardless. But you have to be focused on it. You have to be focused on the goal is to get me out of it, to get you out of it. That's the end goal. All right. Well, if you do have an accounting firm that you do want to sell, and whatever level of documentation of your processes you have done, you can please reach out to me. My name is Tim Kraus with Kraus Accounting Group. If I sent you a letter, please respond to that letter. I would love to talk with you. I'm not an agent. I'm not a broker. I'm a guy who buys and builds accounting firms. That's it. Hope you guys have a great day. Thank you very much. Bye.